Welcome to today's Explainer. We're taking on a massive, frankly mind-blowing topic today. We are going to demystify the staggering physical scale and the really complex financial mechanics working behind the scenes of artificial intelligence. If you've ever found yourself wondering how on earth the companies building these digital brains can possibly afford it, or how AI is actually shifting from this crazy expensive science experiment into an everyday utility, well, you're in the exact right place.
Okay, let's dive right into it. Here's the roadmap for our explainer today. 1. The physical cost of AI. 2. Training versus inference. 3. The enterprise profit engine. 4. Partnerships and custom chips. And finally, 5. Measuring real AI growth.
Starting off with Section 1, the physical cost of AI and shattering the cloud illusion.
You know, it's incredibly tempting to think of artificial intelligence as just weightless software, like it's something magical just floating around in an invisible digital cloud. But honestly, that couldn't be further from the truth. The reality is actually much closer to the early days of electricity. Over a century ago, we had to build these massive, highly expensive power plants and lay down literally millions of miles of physical wire, all just so people could flip a light switch. Today's AI boom is exactly the same. We are building the power plants of the future economy. We're talking warehouse-sized data centers, packed with thousands of specialized processors that run incredibly hot and need massive liquid cooling systems just to keep them from melting down.
And when we talk about power, we mean actual staggering amounts of electricity, 156 gigawatts. That is the projected global power demand for AI data centers by the year 2030. To put that crazy number into perspective, a single gigawatt can power hundreds of thousands of homes. Meeting this unbelievable demand is driving a mind-boggling $5.2 trillion infrastructure boom across the entire global supply chain. So when you ask why AI companies need so much money today, that's why. They're physically building the global grid for a brand new utility.
Moving to Section 2, training versus inference, the two phases of an AI's life.
To really understand where all this money goes, we kind of have to split an AI's life into two totally distinct operational phases. Phase 1 is training. Think of this as the cost of education. It requires thousands of chips running at maximum speed for months just to teach the AI about grammar, logic, and how the world works. It is a massive, one-time upfront capital expenditure, or CapEx. Phase 2, on the other hand, is inference. This is the cost of actually helping users. Every single time you ask an AI a question, it infers the answer. And this isn't a one-time cost. This is a continuous, daily operational expenditure, OpEx, because the company is paying for electricity and processing power every single time a question gets asked.
Let's look at the projected training costs for the year 2028, because we're seeing two very different capital strategies emerging here. OpenAI's training and compute costs are projected to reach up to an absolutely astonishing $121 billion as they try to build vastly more advanced models across text, voice, and video. But then you have Anthropic taking a much more disciplined approach. They're focusing really heavily on efficient training and rigorous safety protocols. Their training costs are projected to peak around $30 billion. That's roughly 4 times less, but they're still producing highly capable tools. Both companies are chasing the exact same goal of building smarter systems, but obviously with drastically different price tags.
But hey, here's some good news for the industry. While those upfront training costs are skyrocketing, the daily cost of inference has completely plummeted, dropping by up to 95% annually for certain tasks. Thanks to some truly brilliant engineering, the computing power that would have cost $20 to generate back in 2022 dropped to just 40 cents by late 2025. This spectacular drop in daily operational cost is absolutely crucial. It's exactly what makes the next phase of this industry possible.
All right, Section 3, the enterprise profit engine, subscriptions versus APIs.
Now, what's super interesting here is the contrast in these business models. We're all pretty familiar with the $20 a month consumer subscription, like ChatGPT Plus or Claude Pro. But economically speaking, that's an all-you-can-eat buffet. If a power user goes in and asks thousands of complex questions, the computing cost can very easily exceed that $20. The AI company actually loses money on that user. The real economic engine is the enterprise API. When businesses plug AI directly into their own software, they don't pay a flat fee. They pay a metered rate, just like your monthly water bill. They're paying a tiny fraction of a cent for every word or token the AI processes.
And let me tell you, that metered water bill model is highly profitable, 75%.
That represents the estimated gross profit margins for OpenAI's enterprise API tokens as of mid-2024. Anthropic sits right around 70%. This means for every dollar a business pays to use the AI, the provider gets to keep about 70 to 75 cents in gross profit after paying for the computing power. This guarantees positive unit economics. Every single API query generates profit, completely sidestepping the risks of that consumer buffet model.
So how do they protect those incredible margins? They use this brilliant strategy called model routing. Think of it kind of like a receptionist at a busy office. When a task comes in, the software assesses it. If you're just asking for a really quick email summary, the receptionist routes that to a small, cheap, fast model like Anthropic's Haiku or OpenAI's Mini. But if you ask it to write a complex software program, it routes it to the massive, expensive models like Opus or GPT-4o. This simple bit of teamwork actually cuts business computing costs by 40 to 70%. It ensures those expensive supercomputers are never wasted on simple trivia.
Which brings us to Section 4, Partnerships and Custom Chips, sharing the trillion-dollar burden. Because, let's be real, even with 75% profit margins, a startup cannot fund a $5.2 trillion infrastructure boom alone.
These startups simply have to partner with the tech giants. OpenAI has this deep, evolving alliance with Microsoft, committing to a staggering $250 billion in future Azure cloud services, while capping Microsoft's profit share at $38 billion to give OpenAI a clear path to independence down the line. Anthropic, meanwhile, took a highly diversified strategy. They signed a $100 billion commitment with Amazon for 5 gigawatts of power, and then another $200 billion commitment with Google Cloud for another 5 gigawatts. They're basically spreading their risk around to ensure they have an absolute abundance of computing power without bankrupting themselves.
Now, a huge piece of this puzzle is the shift to custom silicon. Standard NVIDIA GPUs are amazing, absolutely, but they are incredibly expensive and prone to global supply shortages. So these companies are just designing their own brains. Anthropic is using Amazon's highly energy-efficient Trainium chips, as well as Google's custom TPUs, which are built specifically for AI math. OpenAI is now collaborating directly with Broadcom to design their own AI accelerators. Designing custom chips takes a massive upfront investment for sure, but drastically lowers those daily operational electricity costs over the long run.
So, with billions literally flying around, business leaders quickly realized that just looking at a monthly electricity bill or even a price per token wasn't giving them the full picture of their profitability. So in late 2025, economists introduced this crucial new metric, the Levelized Cost of Artificial Intelligence, or LCOAI. It's a metric directly borrowed from the energy sector, where they use it to calculate the true lifetime cost of something like a wind turbine or solar panel.
The formula basically works like this. You take the total present value of your massive upfront capital expenditures, so the data centers, the training, and you add your ongoing operational expenditures, the daily electricity, the cooling. Then you divide that massive number by the total volume of answers the AI will generate in its entire lifespan. This creates a perfectly transparent window into financial health. It scientifically proves whether spending $10 billion on a custom chip today is actually going to save you money on electricity over the next 5 years. It is exactly how the adults in the room do the math on a trillion-dollar scale.
All right, our final section. Section 5, Measuring Real AI Growth, the race to 30 billion. What do all these economic balancing acts actually produce in the real world? Well, they produce the most spectacular business growth we have ever seen in the tech sector. In February 2026, OpenAI officially crossed $25 billion in annualized revenue, driven by broad consumer popularity and an expanding enterprise base. But look at Anthropic's trajectory. In April 2026, Anthropic announced an annualized revenue run rate of $30 billion, officially passing OpenAI in top-line run rate. And, this just brilliantly illustrates everything we've been talking about today. Anthropic hit that $30 billion mark after a crazy 80x growth spurt, despite having only about 5% of the consumer user base of ChatGPT. How did they do it? By relying almost entirely on the enterprise API market. Their laser focus on highly reliable coding tools for businesses just completely beat out broad consumer popularity from a revenue standpoint. Because they spend 4 times less on training, and they're essentially making pure profit on those business tokens, they are projected to reach complete top-to-bottom business profitability by 2028 or 2029.
And that brings us right to our final thought for this explainer. The billions of dollars being poured into custom chips, data centers, and power grids, it's not just for some cool piece of software. These companies are building a fundamental digital utility, just like the electrical grid or the internet itself. So I want to leave you with this question.
As artificial intelligence fully transitions into an invisible, everyday utility, how will your daily life, your work, and your education be powered by this new multi-trillion-dollar grid? Thank you so much for learning with me today on this explainer. Until next time, stay curious and keep learning.